Hey YouTubers, welcome back to Everyday Finance. I'm your host, Bobby. If this is your first time on the channel, thank you so much for taking time out to watch this video. While you're here, go ahead and smash that like and subscribe button for future content similar to what you will see in today's video. In today's video, we're going to talk about stocks. We're going to talk about stocks from a historical basis, where it all started. We're going to define stocks. We're going to take a look at the different stock types, and also look at the various ways that you can make money in the stock market on a basic level. So let's go ahead and jump right into it. So the first step for us is to define stocks. Stocks are a fractional share of a publicly traded company. So what that means for you is, let's say if you are someone who likes Apple or you like Tesla or a company of that sort, you purchase either a share or a fractional share through whatever investing tool or resource that you currently use of that company. You are now considered a shareholder, and you're considered an owner of that company, and you own however many shares that you purchase. Let's talk about the history of stocks. The stock exchange originated in London. It actually originated in a London warehouse, and this was back in 1773. Now, within America, the American colonies did not create their own stock exchange until the 1800s with the Philadelphia Stock Exchange. After the initial Philadelphia Stock Exchange, there were a few other variants that were created. The Wall Street Stock Exchange was one of those, and the Wall Street Stock Exchange was later turned into the New York Stock Exchange as we currently. Let's talk about stocks. The first stock that we'll talk about today is a growth stock. Now, growth stocks are stocks that increase in capital value as opposed to yielding high income. Growth stocks typically offer small to no dividend amounts. These companies typically offer small to no dividends based on them reinvesting all of their earnings back into the company or into future development. These companies also typically have a competitive advantage that allows them to be leaders in their industries. Think about the companies that you use on a day-to-day basis and how some of them have an advantage, whether that be based on brand recognition or some type of technical service. The next stock type is value stocks. Value stocks are traded at a lower price than their performance or earnings would suggest. Examples of value stocks would be Allstate, Ford, and Morgan Stanley. All of these companies have outperformed and outgained their current trading prices. So that's part of the reason why they're currently being seen as value stocks. Now let's talk about the next stock type, and that's dividend stocks. Dividend stocks are stocks that pay dividends regularly. Now, the payment schedule may vary by company, but typically the schedules that you'll see are either monthly, quarterly, semi-annually, or annually, where you receive dividend amounts from this. Now, if you go into your investing tool that you're currently using, if you do research on a particular company, you'll see what's called the dividend that's shown typically in a percentile amount. Now, within dividend stocks, there are what's called dividend aristocrats. Dividend aristocrats are companies that have had increases in their dividend payouts for 25 years, at least 25 years. Now, these companies are considered elite because they've had an increase in the amount that they pay to their shareholders for at least 25 years. So if at a basic level, if you're looking to invest in a company that has a proven track record of giving returns to their customers and increasing them year by year, you'll want to go with dividend aristocrats. Examples of dividend aristocrats are 3M, Procter & Gamble, and Johnson & Johnson. Now, thinking about being able to increase the amount that you pay your shareholders for 25 years is insane to think about and even harder to do. But with that in mind, an even more elite group of dividend-bearing companies exist, and these are called dividend kings. Now, dividend kings are the elite of the elite. They're your SEAL Team 6 and Delta Force type of elite when it comes to delivering dividends to their shareholders. To be a dividend king, you must have an increase of dividends being paid out to your customers for 50 years. Think about that. Not 25, not 30, 50 years. An increase in payouts to your customers for 50 years. That is insane. I don't know how these companies are doing it, but I am glad they are. From a basic investing standpoint, if you want to have a surefire bet in terms of the companies that you're investing in, dividend kings are the way to go. Examples of companies that have been able to pay dividends for at least 50 years with an increasing value to their shareholders are, again, 3M, you have Coca-Cola, and Johnson & Johnson as well. So these companies are considered the elite of the elite. So much so that in 2020, only 27 companies were considered dividend kings. Think about that when you're investing your money. Now that you know the different stock types, let's talk about the different ways at a basic level that you can earn money in the stock market. The first way that you can earn money in the stock market is by buying and holding. Buying and holding, what do we mean by that? With buying and holding, you buy a particular stock from a company and the value of that stock increases after you purchase it. The difference from the point where you purchase the stock and its current value is the profit that you made off of that stock. Now, typically, people will see significant gains with the buy and hold method when they purchase multiple quantities of a particular stock. The second way to make money in the stock market is through dividend investing. Now, we talked a little bit about dividends in terms of a stock type, but as a form of investing and a way to make money within the stock market, the way that you make money through dividends is twofold. First, when you purchase a stock that offers a dividend, at the end of that particular period or schedule that they have, they'll pay you a dividend amount based on the number of shares that you own. Now, one method that people make money through the stock market is by taking those dividends and having them sent to themselves, whether it be with a check or in their checking or savings accounts for a particular amount. The second way that people make money in the stock market through dividend stocks is by using what we call DRIP, or a dividend reinvestment plan. With a dividend reinvestment plan, the dividends that you receive from a dividend stock are reinvested back into that particular stock and create what we call compounded payments or compounded interest, where you're basically creating a snowball that's going to roll downhill and lead to larger returns in the future. The significance of a dividend reinvestment plan is that it offers you significant returns in the long run as opposed to a lot of money in the short term. This is more so for people who have a lot more time available to them in terms of reaching their financial goals. If you're someone who's looking to have additional income, say 15 to 20 years from now, or even shorter depending on the amount and quantity of stocks that you own that are offering dividends, this is an investment profile that could be right for you. Another way people earn money in the stock market is through day trading. Think about what recently happened with companies such as GameStop, BlackBerry, and AMC. Their stocks started at one particular price point, and by the end of the day or the next day, we're seeing insurmountable gains. Now, the way day traders work is that they'll purchase large quantities of stocks at a very low buying point and then sell them extremely high. The difference between the two is the profit that they make. In addition to this particular option in terms of making money in the stock market, you'll see options selling, you'll see futures selling, and also stock shorting. Those are things that we'll cover in additional videos because at the basic level, we just want to talk about day trading. So that about sums up everything on stocks. In this video, we talked about the history and origin of stock and the stock exchange. We defined stock and the different stock types, as well as talked about the different ways that you can earn money at a basic level in the stock market. If you like this content and enjoyed this video today, be sure to smash that like and subscribe button, and we'll be sure to bring you future content similar to what you've seen in this video today. Always remember, guys, there is no goal that is unobtainable when you apply everyday finance. I'll see you guys in the next one. Bye.